Now let's see if we can look at the actual trend that preceded it. Right in here there was a perfect 5-wave trend that preceded that, and where was that best visible? It was we had already determined in our trading room that this uptrend was forming well around the 1 hour range, and up a little bit and down a little bit from that range. So just look at it and see that as I get up into the 2 hour, I start to lose detail of that trend. I can still see the 5-wave trend. I'm on the 1 hour and 57 minute time frame, and if I go any longer, it's going to start filtering out the retracements, and this will form one wave of a bigger trend. You might even want to see that bigger trend, by the way, as you're trading. I'm up into the 5 hour and 10 minute time frame right now, and there's that bigger trend. So on this time frame you can really see distinctly the waves of that trend. This has now become a 7-wave trend. It's not a perfect example of a trend, and it has already retraced down into the range of this previous high. So while it was forming, we assumed that this was the correction to the trend. But as you can see, it made a new high, and that's one of the things that we always acknowledge that markets can do, and we have a trading strategy that accommodates that possibility before it happens. So now, observe the trend that is displayed there now as I go back down in time, and now I'm starting to see detail inside of those waves. I still see the same trend. I'm on the 2 hour and 25 minute, and when I get down to the 1 hour and 55 minute, I'm back into a range where I can see the 5-wave trend inside of this section alone, and that's the last section of a bigger trend. There's the 1 hour and 11 minute time frame, and I can see that uptrend with 5 waves very clearly now. It's right about the right amount of detail, and what you want to do is make sure that you're focusing on the obvious highs and lows of the particular trend that you're looking at. So it's clear that this is the high, and that's one wave up. This is the low, and that's the second wave down. And this is the high around here, that's wave 3. 4 is just a sideways retracement. 5, and there's no question about where those waves are and where the highs and lows are inside of those waves. But if I go to a shorter time frame, then it will start to become questionable. What highs and lows are we talking about in this trend? There may be highs and lows inside of those trends. See, there's a trend inside of here. Now I'm on the 13 minute. When I get to the 5 minute, there will be a trend. There's a trend inside of this wave. There's what looks like possibly a 5-wave trend right inside of there. So now you know that. Now you know why a lot of traders look at a chart and say, where are the highs and lows that you consider to be forming this trend? And if they're saying that, that's because they don't understand how to tune the frequency of their chart. So if you're looking at a particular trend, you tune into the right time frame and you say, now there's where that looks like a trend. If you go to a shorter time frame, you'll see a trend inside of the waves of that trend, and that's one of the obvious principles of Elliott wave that you've known for some time now already. But when you apply this to your trading strategy, this shows you how. First thing is you identify whatever time frame that you're looking at, whether there's a trend or a correction. And then that tells you the next step to do. If there's a trend, you're looking for an exit. If there's a trend, There could be entries to re-enter that trend on a shorter time frame at the end of a correction on a shorter time frame, and so on and so forth. And you will go up and down the time frames, and you look for the specific trend that you're focusing on at that time, and then you tune it in to where you see that that trend clearly. And then the signal for CCI is also a very interesting thing, that you need to tune in the frequency of CCI continually in order to see the signal for the beginning or end of a trend or correction. Once again, you do have a guide or a roadmap to trading that enables you to quickly identify what is the current trading strategy for any time frame on any chart that you look at. If you're oblivious to whether or not there's a trend or a correction and you just go to a certain time frame and trade all of the time, sometimes your trading strategy will work and sometimes it will not work, and it will work most likely when there is a trend on that time frame. And all the other time there could be trends on other time frames, and it would work there if you went to those time frames. So in addition to that simple guide, which expands your ability to trade on all time frames, and it enables you to enter and exit trades on all time frames at the most ideal time to achieve profit in trades. So if you log into the free videos online that are included with this course, you will see most likely numerous other videos demonstrating how this works on many pieces of the market on all different time frames. And it's something that we do every day in our live trading sessions. We're constantly observing trends and corrections and seeing how our indicators signal the entry and exit for trades over and over again. And every day we can take whatever chart the market has provided to us, anytime, any day, and quickly identify what's the current trading opportunity, what's the next trade, what time frame will it be on, what time frame will I see the signals best from my indicators. Once you are comfortable with that process and you develop that skill and you have experience and practice in doing this, you will be able to enter and exit trades over and over again with consistent profit on all time frames.